Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points.
In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every time the market tested this zone, it got rejected to the upside quite aggressively. And what we can see at the moment is that the market is testing the exact same zone, has already started rejecting it to the upside. And from here, there is definitely the possibility of seeing more potential bullish price action being created away from this level. So the monthly time frame does seem quite bullish, with the market rejecting historical support as we are speaking. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the pattern is very clear. We just went from a situation where the market was creating lower lows and lower highs from a weekly perspective to now creating weekly higher highs and higher lows. We can see here a textbook uptrend getting created. And when you see the creation of an uptrend, what you expect is the market to create higher highs and higher lows every time going and testing the previous high. So essentially the previous resistance turned support, right? This is what you expect in an ideal uptrend. And that is what the market has been also providing here, with already twice the market going and testing the previous highs, which were previous resistance, now turned support. And as we can see right now, the market is rejecting the last level like this. So the last previous high, so previous resistance, now turned support. The next logical step would be for the market here to create a new higher high. So to continue with the uptrend, printing yet another weekly higher high. So let's keep this in mind and drop down on the daily time frame. Well, if we go down on the daily time frame, this is where things really start to get quite interesting. In fact, I also spoke about GBPUSD just a few days ago when the market was here, and I explained all the reasons for which we could expect a break above this level, the retest of this level, and then the continuation to the upside. And in fact, that is exactly what the market did. The market first broke the level, then went for a retest of that level, and then rejected it to the upside, as you would usually expect in a situation like this. And by the way, I will link that previous analysis in the description, so you can go and check it out for more free education. Now, the question is, what kind of structure the market has now created in printing this move? Now, before we dig deeper into what we have from a technical perspective, first, I want to go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and I want to check the data precisely for the GBP. Now, the first thing to keep in mind is that if we are looking at the data for the GBP, we are actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been decreased. We went from having 142k net positions down to 47.8k net positions. So if we look only at the very short term, yes, the net positioning has been decreased. However, it is also important to keep in mind that we don't really see any aggressive shorting. This decrease in net positions is only coming from profit taking from an institutional perspective on the longs that were previously opened. We see, in fact, here tens of thousands of longs getting closed, but no aggressive shorts getting opened. So this is only profit taking that is happening. And if we look at the long term, we can see how actually GBPUSD is still quite bullish. We went from having minus 28.9k net positions, so situations where institutions had way more shorts than longs, 72k shorts compared to only 43k longs, all the way up to now having the complete opposite, so way more longs than shorts, with 47.8k net positions, with 102k longs compared to only 50k shorts. So in the long run, institutions have essentially more than doubled their longs that went from 43k to 102k, and shorts got essentially almost cut in half from 74k to 54k. So even though in the very short term we see some profit taking, in the long term, institutions have still a very bullish positioning at the moment on GBPUSD. So still they are anticipating, in my opinion, the rejection away from the historical support that we have previously identified on the monthly time frame. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, if the market here will create a correction, essentially the nearest level of structure would be this zone here. Now this level was previous support here, turned resistance here, again resistance here, which is now turned support here. If the market will go and retest this level, this is a confluence of support zone, because since we have an impulse and at that point we would also have a correction, if we want to measure that correction, we would have to take our Fibonacci from the low to the high of the impulse leg, which would give us at 0.32 50% and 0.618 Fibonacci retracement levels, which all would be lining up exactly in this zone, creating confluence of support inside of this area. So if the market goes and retests this confluence of support, in my opinion, we have good probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.